Thank you very much, Jens. Can we listen to the findings of the Traders Committee?
Yeah. All right. Good morning, ladies and gentlemen. In the Traders session, we tried to find answers to the selected questions sent by the whole participants prior to the arrival to Rome. In general, the questions were on raw materials, Europe, China, and the USA. For the raw materials, the main topic was how far down the prices will go, or has it really plateaued? Though there were some who believed that there's still room for further reduction, general consensus was that we are somewhere at the bottom or very close to it. For Europe, the main subject was on CARES. CARES now demands to approve not only the mills, the producers, but also the trading company who really sells it to the market. It was discussed to see if this is another way of trade barrier. We had very fruitful discussions on this, and at the end, general idea was that we'll talk more about this, and overall, most of the traders did not really subscribe to the idea. But we will need further discussions on this issue. On China, which is the most popular subject lately, there were discussions on the billets supplied to the producers, and with that, the questions came on the quality control and determining the origin of the products. And of course, which brought the free fall on the prices. Lastly, the discussions were on the current situation in the USA. And one of the topics that was about the new ASTM A615 standard, which now includes grade 75, 80, and even grade 100. We were arguing if the mills are already prepared for those new grades. We were also asked about the trade cases, and since most of them are recently filed, it was concluded that there will be yearly reviews, and there's still danger with the reviews that the rates may go up or down with that. Another subject that was discussed was the current drop in the oil prices, and the question was how does it affect the trading in this business, and was concluded that for the countries that are net importers and steel producers, it was a positive, like in China, Turkey, or Brazil. However, for the receiving countries, importing countries, and producing oil, there's less money to pay, and of course, so for that reason, it was a negative. This was in general what we have discussed, and look forward to your questions. Thank you.
Thank you very much. And next is Producers Committee.
Yeah, thanks, Murat. Good morning, ladies and gentlemen. On the Producers Billet and Rebar Committee, we had obviously we tried to have a very positive contribution from all of us, and we had, so thank you for that. We welcome Carla Costa from Gerdau. Carla, it's great to have you there with us. And I will then explain or try to pass to you what were the conclusions of the meeting. First, in terms of billets, we saw in terms of supply and demand two significant facts that have changed in the last, let's say, 6 months. The first fact is that Turkey has passed from being an net exporter of billets to being a big importer of billets. In fact, until now, and during this year, billet has imported something like 4 million tons of billets that they are using, basically, they're using to roll rebars to export. And then the second fact is that the billet export from China has intensified. So obviously that's creating a very intense competitive environment to the traditional suppliers, which is CIS countries. That, on the other hand, due to the devaluation of currencies and due to the situation in their markets, clearly in 2015 in clear downtrend. Also the export figures from these countries, especially from Russia, they have gone up something like 20, I got the figure here, something like 20%. In terms of what is coming or what is going to happen in the future, in the coming month, what we see is that CIS and China will stay as bigger suppliers in billet market, and so will remain approximately with the same levels, at the same levels that they're having now. And on the other hand, we expect, we don't know exactly when, but we expect when the sanctions are released, Iran probably coming also into the market. But when, that's the question mark. So that was for, in terms of billet trade. And then in terms of rebars, talking about demand, we believe, we see with the figures that we got available that globally demand of rebars is stable, I would say with a minor fluctuation up and down, or up or down, but we can say it's stable. But obviously it's, they got the markets, they are performing different depending on the area in the world. If we talk about, well, I'll try to go quick area by area. If we go to South America and we talk about the biggest economy and market there, Brazil. Brazil is suffering in terms of economic situation, a slowdown. So probably there the market, well, the markets, the steel markets are shrinking, and the market of rebar is going down. All that is obviously affecting all South America because Brazil is exporting to other countries in the area, so it's affecting all the South American market. North America we believe will keep generating a reasonable demand, both Canada and North America and USA. Although, as always, you got there the threats, continuous threats of anti-dumping. So that's going to be a factor that may change the market in next, or the import market in the next coming weeks or months. We move to Europe. Europe, as a developed economy, is it's got the benefits of low oil price, so we believe the demand is going to increase, although at European rates, which is nothing big, but it's going to keep improving. Construction business is clearly recovering from the crisis, and but we see a very different situation if we talk about north of Europe or we talk about south of Europe. All the markets in the south are recovering, but the volumes are still at a very low level compared with the capacity that is available, and that is a problem in Europe, overcapacity at this point in time. We talk about we then went to CIS, and the discussion or the information that the delegates were giving us was that CIS, in terms of steel markets, will stabilize in 2016. So we can expect domestic volumes to be similar to the levels where they are now. But obviously, they will keep exporting all the excess of capacity. One thing that I forgot to mention about, about going back one point to European markets or European business, is that the traditional export markets for European mills, especially the ones in the south, are being affected by the slowdown in terms of availability of currency because of the oil price going down and governments just getting a tighter view in terms of finance. We then talk about the Gulf economies and what, in general, except in Qatar and the Emirates, they all feel that next year is going to be tougher in terms of first demand because the budgets in many countries have been reduced because of oil price and because of the political turmoil in the area. So budgets are going more now to army and things like that, and there's less money available. And so demand is going to be affected, as I said, except in Qatar and Emirates, that they still having a healthy economy. Qatar, because of all the projects for the 2020, I think it's World Cup. And in Dubai, there's still a very lively market in terms of construction because of there's a world show, World Fair in 2020. There's a lot of investment in commercial, in shopping malls and things like that. So apart from those two, demand is going to be in the low side. Also, they are in the area. They are seeing or they are feeling imbalance in terms of overcapacity, and they are feeling the pressure of imports from China as well. Turkish economy is slowing down due to political uncertainty, so that's going to mean that they don't see a big drop on demand, but at least there's not going to be an increase in demand in domestic markets. And in terms of export, as they are, apart from China, second or biggest export in the world of rebars, they are seeing a decrease in or a reduction in export markets, especially in the Middle East. Iran, Yemen, all these countries are affected by the political instability, and that's affecting exports from Turkey. Now going finally to Asia. Except in China, where demand, well, we see yesterday the presentation, demand is going down. The other markets are staying in good health. Demand is good, is growing, but it's all taken by Chinese exports. So it appears that no one else has got an opportunity to sell in those areas apart from the Chinese. So overall, just trying to wrap up all what we discussed. Rebar markets, the only thing you can say is they're under pressure. Due to overcapacity that is pushing margins to historical lows, very low margins at this point in time. And well, this is the cycles are that. I mean, if you are in a point in the cycle where the margin is very, very low, the players in the market start or can or may start to act. Yeah, because this is a situation that is not sustainable, and at a point that may produce a bounce back because, as I said, players start to act, reducing capacity or reducing production. So we are at a point where obviously it may happen or is already happening at some point that players are on the supply side are starting to act to improve the situation. Thank you.
Thank you very much, Mr. Chairman. So let me try to recap what I have just heard. I understood a negative spiral, a supply-driven negative spiral has been seen in the raw materials market, particularly on the scrap side. Demand for scrap, especially in Asia, has been on a negative trend because the substitutes were used in the area, and that pushed supply to go elsewhere and crowded the market in terms of supply. The capacity utilization by the mills is also in decline due to market situation, and that also had a negative effect on the raw materials market. I understood the intra-European demand has been fairly steady lately, but on the supply side, there is significant difficulty in scrap collection due to current market price levels, which is slowing down the collection process. I have also understood we have not seen the bottom yet in terms of prices, but we're close to the bottom. I also noted that the scrap collection costs is expected to go down in the US in the short term. Two more notes here. The Black Sea supply, an important one, has dried out considerably lately, which is increasing the supply-demand imbalance in the market. The lead times have been shortened lately in the market because the orders have been postponed until the last moment. On the traders' side, the traders also are in a general consensus that we are either somewhere near to the bottom in terms of pricing or pretty close to that. The traders expect the billet supply from China to the producers around the world to continue. The new additions to the ASTM standard in the US is a concern for the traders as they are worried that the producers may not be ready to produce those grades, if I'm not mistaken. And the traders expect the dumping cases will still be an issue in the market. The traders also agreed that the oil prices, the change in the oil prices lately, the going down of the oil prices is a positive factor for the net importing countries, but in terms of steel demand, but a negative impact is seen on the oil exporting countries. Coming to the producers. The producers noted two significant changes in the billets market. The first one is that Turkey has become a net importer, a major importer of steel billets from being a net exporter of billets lately. And the second one is that the billet exports from China increased significantly. The producers expect CIS and China to remain as major suppliers of billets and at the similar levels. In addition, the producers expect Iran to come to the market as an alternative supplier of billets if and when the sanctions are lifted. In terms of rebar, the producers see the global demand as generally stable, but with the markets performing differently depending on the area. In South America, Brazil has been suffering economically. There's an economical slowdown, and the demand for long products has been affected negatively in the country, which is also affecting the region, the South American market, negatively as well. In North America, the market is expected to keep generating reasonable level of demand, but there will be continuous threat of anti-dumping, which will have a certain degree of negative impact on the market. In Europe, the market obviously benefits from lower oil price and will keep improving. The demand from construction industry the construction industry is recovering and demand is expected to keep recovering as well. In Southern Europe, the recovery is going on, but volumes are at lower levels compared to past. Capacity in Europe, excess capacity is still an issue, a big issue. Another point that the producers mentioned for Southern European mills was that the traditional export markets for those mills in Southern Europe will be affected negatively because of lower oil prices and the recent changes in the currencies. In CIS, the market is expected to stabilize by 2016, but the producers expect the exports from the region to continue as they are right now. In GCC, with the exception of Qatar and Emirates, next year is expected to be relatively slower due to the changes in oil prices and the political turmoil in the area. Demand is expected to slow down, talking about steel demand, obviously. Qatar has been exceptionally good in terms of steel demand and economical situation. A lot of investments are in the horizon due to several different projects, which will have a positive impact of the demand. But talking about the region, the high pressure is felt from imports from China in the area. Turkey, as mentioned already, has become a major billet importer and is now the second biggest exporter of rebars after China. But the exporters in the country are affected negatively because of the shrinkage of demand in Middle East because of the political turmoil and the recent changes in the economical situation and the currencies, etc. Overall, the supply pressure is pushing prices to historical lows, and we expect to see a little bit more downward trend, I guess. Margins are low for the producers, and the situation is, as far as I understand, unsustainable. Producers are adjusting capacities, reducing capacity utilization, and at a certain point, suppliers will be forced to take necessary measures to change the situation. Thank you very much once again, the chairman of the IREPAS committees. And as always, we have collected several questions for the IREPAS committees. But before I start directing those questions to the chairman of the committees, I'd like to ask if there are any questions from the floor at this point. No questions at this point. They may come later. So if you allow me, let me start with the questions we have collected here. The first question is for the panel. Do you experience or foresee any problems in the financing of trading of steel and or raw materials? Jens, you had mentioned a little bit about this issue. Would you like to start?
Well, we've at least understood that there's been a few areas that have been a little bit affected by financing difficulties when it comes to collecting material to ports in the Black Sea. Some banks in, I think it's mainly in Holland, which have been focused on trade financing, and it's becoming a little bit more of an effort to conclude the financing. So it's taking more time to carry out that financing. So over the short term, it may affect collection, but in the longer term, somehow it will be resolved, I would guess. But that's just in the near past, so to speak. Other than that, it's not a problem in the business at the moment.
Okay, Thank you. From traders' point of view?
Well, I don't think we're in a point where there's a major concern as far as the financing, trade financing. Of course, when the prices do go down and the margins are lower, it's a concern for the financial institutions. And I think the trade finance will be under more scrutiny. So eventually, it will create a problem, but I don't think we have a problem right now.
Thank you. Would you like to add anything from producers?
Yeah, what I would add is that we see clearly restrictions in all producing countries. I mean, obviously the central banks on those countries are, well, not in every country, but in a number of countries, they're trying to restrict the availability of currency, of hard currency. So what we see is that availability of LCs and payment instruments in those countries is restricted.
Thank you. Before I go on with the other questions, please feel free to stop me if you have any questions at any point. The second question is for the Raw Material Suppliers Committee, Jens. The BIR has calculated a steel scrap usage increase in world steel production in 2014 of 0.9% to 585 million metric tons compared with 2013's steel scrap usage total of 580 million metric tons. What is your prediction for this year?
They want the number.
Thanks. You want the number? Well, I may not be able to give you a number, but we've seen some areas where demand for scrap has slowed down, but we've also seen some areas where scrap usage has grown, for example, in China, and we've also seen some areas in South Asia where there's been some new installments of capacity, and also in the Arab region. So our expectations is that the demand for scrap will continue to be fairly good, but it may be dispersed in a larger area, and it may not be as concentrated as it has been in the previous years. So we expect that the demand for scrap will continue to be very good, and going forward likely will continue to grow.
Thank you. Any comments to add? Let me continue then. Next question is for producers. Has the weaker euro helped EU exports as expected? Has this support been at the desired levels, or do you think it has been below expectations? Is the pressure from Chinese exports offsetting the support provided by the weaker euro?
Well, I think that at a point, because I think that was on the most popular currencies, it was the first one that was devaluated. It was a support, but I think after all the turbulences that we had in the markets in summer, with a lot of emerging countries' currencies going down, that's not there anymore. I mean, obviously, against the dollar, we're still having a reasonable level. Probably, we would expect the euro going lower against the dollar, but obviously, Mrs. Yellen is trying to avoid that at any price. So I think it will stay there, maybe fluctuation down to 110, 105, but no more than that. And as I said, now the advantage is more for countries in emerging markets like I know Turkey, South Africa, or Brazil, Russia. They are having much advantage because of even the Chinese, because of the currency.
Thank you. Next one is for traders. To what extent has the strengthening of the US dollar increased the attractiveness of steel imports for buyers in the US market? And accordingly, to what extent does the stronger dollar put pressure on US steel producers?
Okay. Strong dollar is actually a curse for the steel producers in the USA. though USA is not a major steel exporter. However, for the for the exporting countries, it becomes an opportunity to export to the U.S. So for the exporting countries to the U.S., it's a big plus, and for the domestic producers, it's definitely a negative.
Thank you. Well, as we started discussing the currencies, we continue with the currencies. You have already mentioned about Mrs. Yellen.
Yes.
Now the question is for all three chairmen. The U.S. Federal Reserve's monetary policy is of great importance for the global economy. No increase has been made to interest rates in September, though a hike may be announced in October. What is your prediction for U.S. Fed's decision, and how is it going to affect the steel markets? Crystal balls are out.
Well, I can start saying that with the recent unemployment figures discussed, I don't think that Ms. Yellen will increase the interest rates anytime soon. But I think the decision is left for the first quarter. And I think that it's not really the employment figures and the current conditions in the U.S. is not as bright as it seems from outside.
Thank you. Any other comments to add?
Well, I think obviously you are in U.S., but I think that you cannot complain at all. I think that economy in U.S. is performing reasonably well, and they're just pushing the can down the road. And I think that clearly what they are doing is just they're stopping the dollar going up. That's what I think the main point in the decision. I'm sure that at a point they need to do it because the level of unemployment you got is 5.1%, so it's on target. All indicators are reasonably good. I think they have to do it, but they're just trying to hold on until the last moment. When it's going to happen, who knows? But I think it needs to happen soon, yeah. And how it's going to affect the steel markets? Well, I think the dollar... Well, these things you never know because you may say that this decision is already discounted and you're expecting then with the interest rates hike, the dollar going up crazy, and then it doesn't go up because the markets have been discounting the fact for so many time, so for such a long time, that then nothing big happens. What it may happen, they say, is that obviously when the interest rate goes up in U.S., apparently one of the effects is that funds or money that is sitting now in or is invested in emerging markets is going back to the U.S., attracted by the security and the rent and the high interest rate, and that may affect the currencies in emerging markets, and those currencies can continue the way down, and that's going to be probably the effect that we will see currencies in emerging markets going down, farther down. Okay.
Thank you. Any other comments?
Well, I think the longer they postpone the decision to raise the interest rates, the more insecurity in the financial markets. So it's one of the reasons why the financial markets are so volatile, I think. And the longer they postpone those decisions, the worse it just becomes because there's so much speculation going on. I'd rather see them raise the interest rates sooner than later.
Let's see what happens. Any other comments from the floor, particularly from our American colleagues? Anything? No? Okay. Thank you. So moving on to the next question, that is also on currencies again. This is for the traders, by the way. With the devaluation of the Chinese yuan, Chinese exports might increase more than expected. Will this cause trade to become regionalized? And if so, how? What do you think will happen in terms of competition when trade became regionalized?
Well, I don't really believe the devaluation of yuan will increase the Chinese exports and regionalize the trade. China is a very big market, and more yuan per ton will enable more tons to export.
Thank you. Any other comments? Would you like to add anything?
Well, I think that not only because of the Chinese yuan, but I think that the trading is becoming more regionalized. That I think is a fact. I mean, except for the Chinese material, the big movements of steel from one place to another is becoming less and less and less, I think. So you got production facilities more and more in every country. You got supply available in all different regions. So I think that's a fact that this is happening. But it's not only because of the Chinese yuan.
Yeah. Very true.
Okay, the currency changes obviously have been a huge issue for the entire market. There's another question. You have already talked a little bit about this. This is for producers, but let me read it first, and if you'd like to add anything else, please go ahead. Eurofair says there would be very real competitiveness impacts from devaluation in China for European steel firms. America's United Steelworkers has accused China of predatory practices and warned that either China lives by the rules or will face the consequences. Nucor has called the devaluation the latest attempt to support Chinese industry at the expense of producers in the rest of the world who have to earn their cost of capital to survive. How serious a threat is devaluation in China for steel producers in the rest of the world?
I'm not going to be so tough in words. I think, well, you heard yesterday what the Chinese guy was saying in the presentation. I think that first that China is not the first country devaluating the currency. It has happened. I think humble. The Americans, they were the first ones doing it with the dollar, with the QE. So there was clearly a devaluation of the currency. We Europeans, we came later. So I mean, this currency war is just a different thing. I mean, what it is that obviously what it can be discussed is that obviously the system, the economic system of China is a different one, and then the arguments to sustain a factory working, they are like, well, we want to keep employment. We want to keep employment. This is the argument, yeah, and they keep it. And I think those are the facts that could be discussed and could be and should be taken as arguments for discussion on what Chinese exports or the way that Chinese exports are done. But in terms of currency, I think this is okay. It's just a different war that is not only China who is using that tool.
Sure.
But do you think China needs any devaluation to export? I think China if China wants, China is going to export. Yes, they don't need any devaluation. At these prices, they can export. And I don't think, I think that is one subject that is exaggerated too much. Number one, all the world countries do. We just discussed what the US does and why it doesn't and why we differ. China does what they need to do. But for sure, for steel, they don't need devaluation to export to the rest of the world. They already do.
Yeah, that's
certainly. Thanks. Any other comments from the floor on this particular subject? Nobody? All right. So we move on. This is for the raw material suppliers, Jens. In an annual company report, Fortescue Metals Group Chairman Andrew Forrest described the policy of pushing incremental tonnages into an iron ore market that does not want them as market vandalism and self-harm when industry leaders do it. Obviously, we know who he's talking about. Would you agree or disagree that the strategy of the big three iron ore mining companies constitutes market vandalism and self-harm? And what is your prediction for iron ore prices?
Well, I think the chairman of Glencore, Ivan Glasenberg, said something similar to this yesterday about miners having to slow down their supply. And as I said in my earlier remark also, there's a supply-driven, there's an supply output that's a little bit too strong at the moment. But I don't think that the big three iron ore miners vandalize the market on purpose. I think that they have a cost advantage over other miners, and the others have to probably adjust their structures to become more competitive. Otherwise, they'll lose market share. And if that happens, then we'll have less material mined, which would be good for the industry, I think, to lessen the amount of material available. But I don't think it's the three big miners that.
Sure. Vale had announced that their cost was going to be under $13 per ton, cost of production. And BHP, Billiton, and Rio Tinto's costs were $16, $17, and they're heading in the neighborhood of, towards the neighborhood of 15, I guess.
Well, I don't think you should consider this as a market vandalism. You know, it's a strategy these companies play, and same scenario was played in the oil industry. The major oil producers, Saudis, decided to increase their output to basically put the smaller oil companies in the USA that has a higher production cost, mainly the companies that has a fracking technology, to put them out of business. And I can tell right now that they have been successful to do that. I think the iron ore producers have decided to do the same, and it's the same scenario. They are low-cost producers. They want the smaller guys out, and it's my belief that when the smaller guys are out, they can increase the prices. They can control the prices better. So this is a strategy, whether we like it or not. They're very big. They can do things. Now, given maybe the market has turned against them, it may hurt them, but at the end, it's a strategy. And I think any smart CEO of one of these companies know that if they take the smaller guys out, eventually they can control the prices, and they can increase the prices. So when a smaller guy goes out of business, and especially in mining that needs heavy machinery and equipment, once they sell their machinery, once they get out of their leases, it's very tough for them to get back in, and they know that. So it's a game, it's a scenario. It's not market vandalism. It's a fact of life.
And this is the fourth big that complains about this strategy.
Well, it didn't help him, because obviously his cost is higher. And the numbers you gave are actually the actual cost of getting the iron ore, but it doesn't really include the shipping and all that. So don't expect the iron ore prices to be at $13, $16 anytime soon. But obviously, it's all thread. It's all saying to the financiers of the smaller guys is, don't hold on, because if you do, we have more room to go down. Whether they will or not depends how far they can push the smaller guys out.
And by the way, Fortescue claims that their cost is in the low 20s, and they still complain.
I don't know what they, look, Glencore is losing tons of money. They're complaining. And if the costs are in the 20s, and the iron ore price is in 53rd or 50s, I should say, how come they're all losing money or they're all complaining? There's obviously something that does not add up. And frankly, I would like to hear opinions of the rest of the yield because it's a big scenario, definitely not vandalism, but it's a scenario, it's a market economy. So if you have any other opinion, I'd like to hear that.
Any comments from the floor? Yes, please, Michael. The microphone is coming.
Good morning. I'd like to first comment on the question before about the devaluation of the Chinese currency. The reasoning by the Chinese authorities was to increase the consumption of the domestically produced goods in China against imports. So what China did by devaluing is that they make imports more expensive for the Chinese consumption market. Secondly, when China devalues the RMB, it also reduces, that is negated by the fact that they have to pay more in dollars for the iron ore. And because iron ore is such a heavy component in the cost of the steel, there's no real great benefit by devaluing the currency to export steel. So if there comes another devaluation, I wouldn't expect that's going to give any impetus for any increase in export of steel. A couple of people have talked about that the iron ore miners are losing money. Well, the major three companies are still making billions of dollars in 2015. And obviously a few people have gone out of business. So we expect that to happen, continue to happen in the future at these levels. I don't know, does anybody in the room here know what the Dalian iron ore futures market is right now for September 2016?
I don't know. Anybody?
We'll ask a fortune teller for you.
I think it's $42, something like that.
That's good to know.
I'm not certain. But as someone said on the panel, the market, it is a market economy, and the market will go where the market goes.
Oh, sure.
Thank you.
Any other comments? Thank you, Michael. And so, my apologies if I missed your comment on the currency question.
Well, I don't really think that China is a big importer of any product, and I don't think that they're going to devaluate their yuan just to stop the importers. That's a nice front that they can use. China is a major exporter, and if they do anything like that, it has something to do with their exports. And but I don't really think that has much to do with the steel exports. China is not trying to export steel. China's got a lot of other products that they're dealing with, and steel is not number one on their list.
Thank you. So we move on to the next question. This is for the producers. You had already talked about the Turkish rebar export situation, but let me read the question. Turkey's rebar export activity is contracting, with China replacing Turkish imports in several markets, while the US is always threatening anti-dumping action. Against this backdrop, do you think Turkish producers are likely to merge, and that possible mergers could eliminate anti-dumping threats in the US market?
Well, for that, I would like a Turkish colleague to answer, please. Can you, or anyone? Because
not in the room right now.
I mean, the merger is something that's still quite a long way to go for the Turkish producers, because I've been watching the Italians for ages. That doesn't happen, so I don't really think that would also be the case for the Turkish producers, because they're small-sized family companies and likes to have it say, let it be small, let it be mine. But as far as the dumping issue is concerned, of course, we have a huge experience how to deal with. Every sale that is done, it's already been calculated before the deal is concluded. So that what makes Turks quite, let's say, clear and confident about these investigations. And now we have one coming up, or already came on the Harald coils. I believe we will see a similar result. Yes.
Thanks.
Chinese are going to start, I mean, they have already started, and they will continue kicking us out from various markets for sure.
Thank you.
Thank you. Thanks.
Moving on to the next question. Jens, this is for you. Due to cost calculations, many steel mills have recently been opting to buy billets to roll into rebars rather than producing steel from scrap. This has already been discussed. Do you think this trend will have a sustainable impact on the scrap market and scrap prices?
I think it's had an effect on scrap trade, of course, and already, and I think it will likely continue to have an effect because it's a benchmark, and but it also has a real effect on production levels when it comes to melting your own scrap. So, and I already think that the levels in some areas are at their low levels, where how low they can go on scrap usage. So, but also if Turkey's imports of billet is based on steel exports, and the steel exports are slow, then the amount of billet into Turkey might not grow so much. It might have already peaked. So I think that it might not have so much of an effect going forward, in some areas at least.
Valdeler?
Something, Jens. I mean, as Kim have said, that was, it will be more or less 4 million tons this year, but the total export of rebars is around 7. You can add another close to 1 million for the structurals, 8. So we just import 50% of what we need to import. It means that we can double this number. What's the portion of Turkey in European scrap export?
It's fairly high, I would say.
So do you still believe that would have a little impact if Turkey continues importing billets for their export?
I do think it will affect the scrap, but in Turkey, if you import billets, I think there's an import duty of 24% if you use.
No, this is only for the export.
Yeah, and so if you use the billet and roll it to sell internal into Turkey, it's not possible to do that. And when steel exports from Turkey has perhaps slowed slightly and doesn't look fantastic at the moment, that's what I was meaning, that it might have peaked already.
It sounds like you're trying to find any reason to say that the scrap is not going to come down.
As a scrap supplier, we always try to find reasons for scrap prices to not come down.
No, what I'm saying, I mean, Turkey produces almost like 20 million tons of long products, out of which 8 is consumed. The rebar I'm talking about, internally, there's 7 exported. Yeah. Plus the structurals that are 8 million tons of long product exports. So there's still potential that Turkey might import another 4 million tons as long as scrap stays up. So I think you guys have to think once again, because I don't see any other market for the European or the US scrap suppliers to ship their goods.
It sounds to me like a negotiation.
I was going to say that.
No, I mean,
I think it's a risky business for Turkish producers as well to import too much billet from China. The lead times are more than a quarter, and the risks are quite high to import material.
But when we ask scrap offer from Rotterdam, they don't give us earlier than a month or 6 weeks. So lead times are more or less the same.
All right.
No, I'd like to make one comment. For this last 2 days, the talks is going on. There's no scrap collection. It all slowed down. The yards are empty. But I just received a mail from our colleague in New York saying that I have never seen so much of scrap in my life as today appears one of the biggest exporters. And this mail just came by coincidence. So I would like to share with all the rest of you to know what the reality is.
I said that the supply of scrap is slowing, but I also said that the demand for scrap is slowing. So
It's already been collected. Supply is slowing.
Okay, thank you very much. Yes, Ahmed. Sometimes I cannot see this one. Well, it was exciting to have live negotiations.
I also have a question to Mr. Jens. With regards steel prices, nowadays the producer margins are at the bottom. Traders' margins are at the bottom. We are hearing now that Vale and the other big three have a cost of about $13 to $16, probably mining cost. So we can understand that CFR iron ore price cost should be around 25, 30. So there's maybe $20 room to go down for iron ore. But for scrap, I want to understand if, let's say, Turkey has new investments for 2 or 3 blast furnaces, maybe in the next 3 to 5 years. Maybe 2 or 3 of them, about 10 million ton capacity, and then the Turkish scrap demand will be 10 million ton less. If there's, I want to ask, the sole cost of not collecting but cutting, tracking, loading and shipping costs of scrap, would it be around $20, $30 if scrap is no demand for scrap? If there is no demand for scrap, what would be the price of the sole cost of collecting and shipping? Now it's 190, 180, let's say, but this is because of the demand coming from mainly from Turkey or the other buyers. But if the demand goes down significantly, what would be the cost of collecting scrap, and then how much do you think you would sell?
I mean, the cost of collections has most likely increased over the past 20 years because a lot of capital has been put into the industry. But even though, I mean, the Turkish market may shift slight of their production towards integrated mills, but we also see other areas where they are actively investing in electric arc furnaces. So I don't expect that the demand for scrap will, I mean, okay, the demand for scrap in Turkey may be reduced, but in general, I don't think that it's going to have such a huge effect. Price-wise, I can't really comment on where the prices will be. I mean, we see on the futures exchange a year from now that the iron ore prices are maybe a few dollars lower than they are today, even though the cost for retrieving the material may be a lot lower. And it's more based on a supply and demand and the demand levels. So the shift of production in Turkey is going to take a few years probably, and we'll see what kind of levels of demand will be then. But I expect that the demand for scrap will continue to be fairly good. I mean, we see in the U.S. that they are closing maybe some blast furnaces and in putting in place electric arc capacity instead to be more flexible. So it's a choice in different areas.
In my opinion,
blast furnace investments are very large investments, and you don't go ahead and make decisions on such large investments over short-term market changes. So what you see now, the equilibrium between the iron ore and scrap, it may be temporary. So you do not make decisions, long-term decisions over short-term market movements. So I don't think that the Turks will, will change from scrap to iron ore. Scrap has more standing for Turkey futuristically than iron ore. Turkey is a net importer of oil anyway.
But you say if there's a change, they wouldn't do that. But if it continues 3 years, 5 years, 10 years, and you are losing your markets, then you have to do it sometime, right?
That's very true. But then 10 years we'll discuss at that time. But I really
maybe 3
think
years,
that
5 years. Already we have seen past 5 years with a cost advantage of the blast furnaces. And now if you say another 5 years, it adds up to 10.
It's hard to find financiers who is going to finance such large investments in this depressive market. Really hard.
But finally, either scrap should go down or Turkish will have to make investments. So this is my idea.
This is something we need to live and see. Okay, thank you very much. Next question for traders. Would you agree that capital spending on fixed asset investments, which drives a huge portion of global steel demand, is mostly held back due to economic and financial worries around the world? If so, what can change this situation?
Well, I guess this is similar to what we have just discussed. Fixed asset investments depends on more than one factor. One important factor, obviously, is the current economic situation, but another one is the tax laws of that country. The amortization of your investment is a major factor in your investments. So it's really more than one. Obviously, the economy, when the financial worries will make the financial markets jittery and they may not finance it, so it will affect negatively. But this is not the only one. Another thing I'm going to say is it's sometimes looked at as strategic investments and subsidized or financed by the governments. So then they look at their local economies rather than the world economies. So these investments are not necessarily looking at the world and how the world is doing. They're looking at their own economy and their local economies, how they're doing, and making those investments. They always depend on trade barriers anyway and duties and whatnot, so they feel like if their country needs the investment, they're going to invest it, and if the world steel prices are cheaper, maybe they can protect it. But this is not always the case, but this is one of the important considerations.
I think market economy is cyclical, and we are living in a very cyclical industry, as all industries. And majority of investments in cyclical in market economy and cyclical sector are taken in the wrong time. I mean, when market goes up, people see that that market is good and you can make a lot of money, and then you spend your money in this market and you put factories and factories and factories, and then obviously when you put all the factories, market starts to go down. And when market goes down and market is at the bottom, everybody's in panic, it's fear, everything. So nobody put a single dollar in that business. What you need first, obviously I think we are almost at that point. And then you obviously then, because of demand, the help of demand and different factors, business goes back up again, and then money comes back. And I think this is the logic behind the investment in a cyclical sector.
Like I'm going to say, when China was investing in the steel industry, they didn't look at the world demand and they said, well, we can probably sell this more, so let's produce and let's finance more mills, build more mills to sell to the world. They look at their own economy. They were in a growth mode, so they needed more factories, and they built more factories. Now, sadly, when their economies, when their growth start going down from 9, 10 to 7, then they have the extra capacity, and now they're trying to sell the world, and they're now looking at the world economy and is affected by the world economy. Originally, Their main idea was to support their own growth locally in the industry.
Thank you. Moving on to the next one. This has, oops. Yes. This has already been discussed and mostly answered by the Traders Committee, but let me read the question and if there are any other comments to add. Amid the sharp drop in oil prices, how significantly has steel demand for energy-related projects been impacted, and in which countries has the negative impact been the greatest? Anybody to add?
I think, as said yesterday in my speech, this is proof in globally, low oil price is good. It generates growth globally. Obviously, then there are winners and losers. Clearly, winners are the importing countries, apart from in USA, some areas, because they are specialized in oil industry. The winners are all importing countries. The losers are the oil-producing countries. But globally, it's good for the global growth. And in terms of low oil producer countries, there are countries that can manage that better because of reserves, because of diversifying in the economy of those countries. They are managing better than others. But in general, globally, I think it's good.
Thank you. Next one is for producers. You had already talked about the Iranian situation a little bit, but let me read the question once again. After the removal of sanctions, Iran is expected to begin to increase its steel exports, mainly square billets, as billet demand from mini mills is growing around the world, and in the MENA region in particular, due to overvalued scrap prices. These are not my words. Moreover, Iranian steel companies, with their own direct reduced iron, have the lowest costs in the region. What are your observations and expectations?
I'm not an expert in Iran, but I guess, well, it's true that obviously there is a potential of exporting basic products there in billets. There's a potential of export when and if sanctions really happen. That I think it will happen. They will happen. So there's a potential. Obviously, there's also potential for import, for selling into Iran, because there are a number of products that they don't produce, certain products they don't produce. But where's going to be the balance, I don't have a clear idea now. I don't know. If anyone is an expert on Iran and want to add anything.
Michael, can we have the microphone, please? For Michael. Michael, there's the microphone.
Iran is already exporting steel. They're exporting hot roll coils and hot roll plate into the Spanish market, for example. Quantity, I think, in 2014 was somewhere around 480,000 tons of Iranian steel came to the European Union. Iran is continuously exporting billets, not on a continuous basis, or not on a monthly basis, but it's always being seen in the Middle East area. So I would not expect a huge surge of Iranian steel exports, because obviously they need to get going, and their primary profit probably will be coming from infrastructure spending in Iran once the sanctions are lifted. However, there was an announcement made by the Ministry of Industry in Tehran last week saying that he expected Iran to stop exporting iron ore in 5 years' time, because it's needed in the domestic market. So as I reminded myself that IREPAS, when we started so many years ago, that the principal trade of rebars worldwide was to Iran. I think Iran, in the first couple of years, IREPAS was buying 2.5, 3 million tons of rebars per year. So who knows, maybe that will come back.
Hopefully. Any other comments at this point? Moving on to the next one. This is for raw material suppliers. The Chinese government is expected to offer legal and financial incentives to steel mills that use scrap metal as a raw material in hopes of weaning the industry of far more polluting and energy-intensive iron ore-based steel production. Currently, only 11% of China's steel is produced from scrap, and the government would like to raise this share to 30%. How do you think such a development would change the market?
Well, I think that the Chinese are actively working on taking care of all their resources that are that come from internal markets. So they will do their utmost to be able to handle the increasing volumes of scrap in their internal market, and they will try to do that since they otherwise will have to import iron ore, and I think that they will be able to take care of it going forward, and I think it will be a strategy for them also, because they will not be able to import iron ore and at the same time export scrap. I don't think that's a sustainable future, but it may take some time for them to take care of all the scrap that's projected to fall in China. But over time, I think that the steel industry will have to adjust.
Well, you may be surprised how fast they make the change. There's a serious pressure on the Chinese government on the environmental issues. And that pressure, plus the fact that China is becoming a more and more scrap generator, so there will be more scrap generated within the country, and instead of exporting, obviously, they would like to put it to use. So it's a good cycle for them. I think that's inevitable and it's coming, and Chinese are very fast in making those changes. And that's good news for you?
I'd like to make a comment on that. In the 1980s, there was a tremendous amount of investments in electric arc furnaces in China because electricity was cheap and abundant. Within 10 years, almost all of those new units were closed because the electricity prices in the provinces and the cities went up dramatically. So whether China goes the EAF route will depend heavily on whether there's an abundant electricity and whether it's cheap or not. Because right now, it's still cheaper to produce a blast furnace than the electric arc furnace in China. And most of the electric arc furnaces that are operating with charges of hot metal coming from blast furnaces, plus the addition of scrap. So I think that it's not a foregone conclusion that China will be is constructing electric arc furnaces just because it's economic.
Well, electricity is part of the economics equation, right? So it is economics, but it's just that there is serious pressure on the Chinese government on the environmental issues, and I think eventually they're going to have to just shut down or reduce the emissions that they put out. So there's a pressure on them. I think it eventually will happen. I don't know how fast it can go to 30%, but if China wants it, they can make it happen.
Thank you. Last few questions. This is for traders. What could the steel industry expect in terms of potential consequences of granting China the status of a market economy?
Well, I surely am not an expert on this issue, on this subject, but I'm assuming that when they get into the market economy, it will make it easier for the lawyers to file anti-dumping against them, because the threshold that they can use would be easier to follow, and they can look at their domestic market and all this. Again, this is just my assumption. I don't know the facts.
So the lawyers would be looking forward.
They are. I'm sure they'll find ways.
Any comments? Any other comments on the floor? Okay, next one is for producers. Japanese and South Korean steel companies have been more active in exporting wire rods to the US market recently. How have such orders changed the market situation for other traditional exporters of wire rods from Europe and Turkey to the US market?
Dan, you want to make a comment here?
I haven't seen much Chinese and South Korean. Obviously, somebody's trying to replace Chinese. I think it's open to everybody. I don't think it's only those two countries. I think it's a new, there's an open market, and Turkey will be just one of the major exporters to it. It's just the price. If the Japanese can make it cheaper, they'll sell. If the Koreans make it cheaper, they'll sell.
So you don't see any significant impact?
No.
My idea is that these two sources of supply, they go to the west coast of the U.S.
Oh.
That's my idea. So it's a market that is split like in west coast. These guys go there together with the Chinese, and then there's Houston on the east coast. This is for more for
very true. And then another differentiation is Turkey is a low-carbon wire rod exporter to the U.S., and when it comes to mid and high, that is mostly the Japanese. I really didn't see much Korean, but Japanese for sure. So it really has something to do with the type of wire rod. In the past, I have always looked at the statistics, and what came from Japan was always the high carbon or special alloy wire rod.
They don't get much into commercial.
Right.
All right. No questions. Moving on to the next one. This is once again for the raw material suppliers, Jens. Turkish steel producers has started to expect scrap export prices at lower than $190 in October. How much lower can scrap prices go? Obviously, this question was sent a while ago. So,
I mean, it's a very you ask anybody in here, everybody will say a different number, of course. But the prices, I mean, scrap is always traded no matter what kind of pricing it is. So it doesn't really matter what price it is. It just matters that you take care of your positioning, and you don't take risks too much, and that both suppliers and the consumers agree on a sustainable levels. So
that's a very scary answer, my friend.
No.
So
but what am I going to say? That
no
the
bottom.
cost for scrap is this and that. It's the market is what it is, and I don't really have a specific number how far prices could go. But in 2008, I think we had $750 in Turkey, and we also had $140 in Turkey. So I guess last time I think I said somewhere in between that level is where we'll see prices.
thank you. Any comments from the floor?
It was a very clear answer.
I think it's pretty clear.
Somewhere in between 750 and 150.
No, what he doesn't want to say, I don't know what the Turks are going to pay, because they're the ones who makes the decision, I guess, at the end, rather than the scrap suppliers.
Well, the Turkish supplier, Turkish
which is unpredictable.
The Turkish steel producers are also a part of the market. So I mean, we all have to adjust to the situation of the current market, I think.
But isn't there a minimum where you can say that I don't believe it's ever going to be this number? And let's say 100, I'm just making it up for you.
If you say that, the following week, you are below the number.
But this question needs to be directed to the Turkish buyers rather than the scrap suppliers.
I think a lot of markets, the scrap collectors aren't able to pay for scrap in many of the markets. And when you can't pay for scrap, the supply often drains. And when supply drains, there will be a problem for consumers of scrap. So likely the amount of scrap will be less if prices continue to drop, and then we'll probably see some sort of stabilization. So, but I think we're most likely very close to that level, although I can't say that the prices won't be able to go further.
Well, there is a...
Jens, can I ask you a question? When do you think we would achieve 130 levels?
Well, we didn't achieve 130 level when there was a financial crisis in 2008. We didn't even go that low, so...
That's history, 2008. I mean, I can give you another example,
what I'm saying.
2001, it was 55. So my question is, when do you think that will achieve 130 level?
I think that we aren't in a financial catastrophic situation as we were in 2008. I don't think that the market is as poor as it was then. There's a lot of positive factors in consumption economies at the moment. So currently we're in a negative market movement, but I don't foresee the prices to be catastrophic numbers.
No, the reason why I'm asking this because Chinese today offering billets at 260. So if you go backwards trying to find the equivalent price of scrap, that needs to be 130.
So,
but the Chinese today offering 260. So my question is, when do you think that you'll be able to compete with Chinese?
Well, it offers of material that are shipped at X and Y, Z. So I have no idea where pricing will end up in the next quarter, but it doesn't look very optimistic at the moment.
Thank you. There will be a line, probably.
He said 150, I mean, when?
It's really a live negotiation.
I think we need to do a bet here. I mean, we need to put money on the table and everybody bets.
Now with 190, it is we reach the bottom or there will be further down. Just we like to share the experience. Just now we reach to the bottom or not yet?
Well, there is a minimum cost of really collecting, processing, and shipping. So I don't know what that number is, but there is a minimum cost. So it's not like completely
already
arbitrary.
the gentleman, he asked the same question. Then he said for the collection and shipping and preparation already. I think there is a minimum cost for that one.
Right.
I think I agree with him for 130 also.
There are quite a lot of imbalances in the market nowadays. I mean, the Turkish situation is... Well,
You just said it for us.
Hi. Can someone share with me, and perhaps Ugur can shed some light, what is the cost of converting billets to rebar versus scrap to rebar? What is the differential?
I'd like to hear from the producers.
I mean, as I said, 260 is equivalent to $130 scrap.
I don't think that's correct. I think that's a little bit high, maybe, but...
Should I lower it, 120?
Thank you. That was good. Okay. Yeah, there's... Jerome, is it... I cannot see you from the lights. Yes.
Thank you. Just was wondering, referring to scrap, usual differential between Baltic or European scrap against US scrap has been, US scrap has been paying a premium of about $10. I was wondering how this is evaluating today with prices going down. Do you see this differential move? And is there more competition now between US scrap against Europe than there was before?
Well, I mean, the demand for scrap in the US has perhaps cooled off a little bit. It was quite strong earlier, and they had some needs to add material, but I don't think that at the moment the demand for scrap in the United States domestic market is strong enough to stay at a premium at the moment over Europe.
Thank you. So no more questions, I guess. Let me move to the last question I have here. This is for the traders, but anybody is welcome to add their comments. A full 7 years has now passed since the financial crisis began. The global economy and international steel markets are still characterized by uncertainty and sluggishness. Quantitative easing has been practiced in the US and lately also in the EU. though the financial sector and the stock market seem to have been the main beneficiaries rather than the real economy. Is there no end in sight to the current uncertainty and sluggishness in the steel markets? Or would massive and decisive government spending be required, for example, on infrastructure projects, to kickstart demand in markets for once and for all?
Well, actually, this is a very good question, really. The infrastructure spending or expected spending in the U.S., I have to talk about U.S. only, has not reached, it's not even close to its peak. I just read in Wall Street Journal, and I'm not 100% sure on the exact numbers, but what it was saying is the Obama administration in 2011 set aside $800 billion for infrastructure spending, and out of which today only $30 billion have been realized. So what are we waiting for? It is the local governments, environmentalists, so much bureaucracy that we have that doesn't let these projects really to go to actually shovel ready and be used. So in that sense, I think we're not even close, and I don't know how we will change things, because it's not like the government sets aside the money and puts it in this budget and immediately it goes into the economy. It didn't. So there's still very large room to grow.
Thank you. Well,
this is a question.
I don't think this is a question. This is, yeah. Thank you.
No, well, look, this is economics. I mean, more than steel business is economics. It's, and you got pros and cons here. I mean, this is being probably a Keynes follower, saying what you need to do to resolve the problem of the economy is just pump money into the economy and build things, and then everybody's happy, and you create inflation, and everybody's happy. But and the other side of the more liberals, they say don't do that, because that obviously you keep feeding a very inefficient industry, or a very inefficient market. So I don't know. I mean, it's every economic area, every country, every area, Europe, America is taking the one way or another way. But really, I think that the problems of the steel industry need to be resolved by the steel industry. I mean, you cannot wait for the government to come and create a massive spending plan to keep you running with the same inefficiencies, with the same all practices, with the same all structures. So, okay, this helps, but I think that the solution of our problems needs to be, we need to resolve those problems.
And actually, what you said is so true. Yesterday, Li Xinjuan was saying, and it's not only China, don't expect only China to cut down, it is the whole world. Steel production should come down. So we only look at, of course, the biggest economy, we want them to come down, and he was showing that it came down 2%, and I don't know the facts, but it's not only China, it is the whole world production has to come down to really put an equilibrium, because we're actually the consumption today is much lower than the production. That is the reason. Okay. Well, he said he came 2%.
40%. In Rebar's 40%.
The last 2 years, Turkey have done 20%. So 2% doesn't mean it.
Well, yeah, 2% is
2%.
That's what he said.
meaningless.
It's a start.
Well, yeah.
Okay. Any other comments from the floor? I guess. and the battery is dying, so we have to close the session.
For the first time, we have put the battery down there.
So thank you very much, the chairman of IREPAS committees, for your comments and all the information that you have shared with us. I would like to thank you all, ladies and gentlemen, for your participation and attendance. I also would like to thank our sponsors, starting with our platinum sponsors, Qatar Steel, Liberty House Group, CNF International, Belgian Scrap Terminal, Seacon, and Yol Bulan Baştu Metallurgy for their support. As I have announced yesterday, our next meeting will take place in Lisbon, Portugal, on April 10th to 12th next year. Hoping to see all of you there. Thank you once again, and have a nice flight back home. Thank you.
Thank you. Thank you.